Finally, after years of downtrending, there's a glimmer of hope in the PayPal stock. Stripe has put out a bid for PayPal at $60.50 per share. But that is not all. A few days before that, Michael Burry took a position in the stock saying that it is extremely undervalued, and there were three reasons that he took that position. First, he said that he believes that PayPal has become one of the cheapest high quality business in the market after years of underperformance. The second reason was that the market is obsessed with AI stocks right now, and any company that is not investing into AI is getting overlooked right now. This is creating opportunities for companies like PayPal, Adobe, and Lululemon. And the third reason is that despite slowing down in growth, PayPal continues to generate significant cash flows and they are buying back their stock year over year. And for those three reasons, Michael Burry took a position in that stock. And I will say that he's not the type of investor who holds stocks until it breaks all-time highs and continue higher. He usually likes to buy oversold positions that can go back to at least their intrinsic value, which is why I created this one pager for you where it shows you the bear case, the base case, and the bull case. This is a very conservative model that I've built for myself. And even after that, we are still below the bear case for this stock. So Michael Burry is right. This is a mismatch in the pricing. And of course, Stripe is also seeing this opportunity to come in and put a bid for $60 per share. But I do believe that that is an opening bid and we could go higher. But I know you can find all of this information on the news or using ChatGPT or Claude. So let's get into the real stuff which you come here for, which is the charting. Let's see if we can find an entry and if this stock is worth entering or not. So this is a chart that's zoomed out all the way to its IPO time, and as you can see, we've been crashing since 2021. When we look at the technicals, it is important to understand where the stock has been in the last few years. So I'm going to draw this trend line here, which is basically a support line which finally broke, and we flushed under it after earnings, which was the last ER. Next thing I want you to notice that we were creating this downtrend, which finally broke, and the stock tried to push back up and then we started downtrending again. And you can see another similar pattern happening here again, which shows that we are doing another downtrend and we have finally broken above this level. Now, a few things to notice here. This was a major support line which got broken down, and if we tap into this, there's a high chance that we reject. Another thing you need to see is that the $60 price is what Stripe is offering. So anything above $61 doesn't make sense this fast unless they increase their bid. If they do increase their bid to 65, the stock will probably jump again. But for now, understand that because of this previous trend line and the offer that Stripe put out, we are seeing resistance around $57 to $61 area. Now, if you're someone who's been waiting for any type of bullish price action on PayPal or any bullish news, and you've been waiting for a long time, you can enter the stock here and maybe we continue higher. But if you are looking for a precision entry, a better entry at least, I would suggest we wait because there are a few more reasons, right? Let's jump on to the daily chart. Every time a stock gaps down like this, where overnight the stock has dropped and we opened over here, this is called a gap. The market pushes back up into that area, closes that gap before it continues lower. The same thing happens if the stock jumps up. Usually what happens is the stock comes back down. Actually, let me clean this chart here a little bit. Usually what happens is the stock comes down. So I'm expecting this to come down. And once we fill this gap, this might be a great opportunity to enter. And you can easily put stops below $40 area if you do not want to, hold the stock, even though it's at a price where even if you don't put a stop and you just let the position go sideways and wait for the breakout, I don't think there will be too much downside. But if you want to be precise, you want to enter at the right spot, then I think if you could wait for the stock to come below $50, that would be a very good entry. And nothing wrong with entering right now, but I just don't like to sit through a 13-15% drawdown when I know that there's a higher chance that we come down here. Because in trading, you're just playing the probabilities game, right? The probability here shows me that this retest will get tested and then will come down again, just so we can fill the gap and start making our way back up. But overall, who knows? We might just break out here and continue higher, but I do think we have overall bottomed here at around $40 area. And if you do create this downtrend line that I was mentioning where we broke out of, most of the times that line does get retested one more time and then we go up higher again. In this case scenario, you can see that we broke out and then we did come back to retest this level again and then continued higher. All it takes is just some patience, right? You don't need to be in every stock. Let the stock come to you. Let it present itself as something that is worthy of your money. Do not chase for no reason. If you are somebody who cannot sit through a 15% drawdown on this trade, do not enter here. Just wait it out. We'll get an entry around 50 or below. I don't know if I'm going to take this trade, but I thought I could make a video here to help you with some patience and give you some reasons as to why you shouldn't purchase it right here. And I'll give you one more example on United Healthcare stock. This is the stock that was pushing up on news that Warren Buffett has accumulated a position somewhere around $280. And I remember the stock being here and me thinking most likely everybody's going to jump into the stock. The market is going to push down. It's going to create a situation where it looks like, Warren was wrong and the stock will probably go lower. And all of a sudden we get accumulation again in this area and then we take off. So when these large buyers come in or large bids come in, or company like Stripe is saying that $60 is the price we would pay, these events won't fade out right away, but they do take some time and eventually fade so that levels can get a retest and then we push back up higher again. And understand also another thing from a buyer or a seller perspective, right? Most of the times what happens is day traders, momentum traders, retail buyers, traders come in into the momentum of these types of news and they accumulate as much as they can and they're ready to just walk away because they're like, okay, the stock is ready to go. That's not where institutions buy their positions. And if there is no institution bucket buying a stock, it will probably not push as high as you wish it would. So when these pullbacks happen, that's where institutions are accumulating their positions, and this gives the chart to just relax, get all those weak hands out of the way, strong positions are accumulated, and then the stocks go higher. So again, I don't know where this goes next, but I do want to say that with experience that I have seen that there's a higher chance we come down to 50, retest that, and then continue higher. Maybe I take this trade with you. Only time will tell. So with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.